When big, huge bull markets actually happen in metals, usually what happens is gold starts and silver actually starts to pick up and even outpace gold in a real market up move. So it's actually crazy to see silver doing so well. I'm a big fan of it. I want it to keep going. And shout out to anybody who is long silver. That's awesome. Let's start with the dollar index just to take a look here. Dollar index continues to roll over. And I don't know if you guys can totally see this. This is so frustrating. My taskbar here won't hide. Does anybody know how to I'm doing full screen here and usually that hides it. I'm not sure why it's not hiding. Can I hide taskbar without having to open my settings? Usually that just works. Regardless, the dollar index, let's keep going with this thought here. So the dollar index hit a level of resistance here and has proven so far to find resistance in the same spot here, right around that 105 level. The US dollar currency index, of course, turning south and continuing to roll over here. The previous time that we hit this level, this was an area of support, but it seems like that might be falling apart here so far. So if you're watching the dollar index, whether you're trading currency crosses or you're just using the dollar index as a gauge for trading, gold indices, etc., this is potentially a short-term red flag for the dollar, because if this continues to roll over, right? If you see a breakout here, that could be a little tough. I also went long dollar Swiss, so this is not great for my idea here this morning. So I went long here on USD CHF. My thought process on dollar Swiss is basically this: if this continues to break this level, I'll stop out. Otherwise, we'll continue to push higher. So I'm long dollar by against the dollar against the Swiss franc. Euro USD also trading higher here this morning. Some strength on the euro relative to the dollar. The pound dollar also pushing higher, and dollar yen pressed up against this resistance points. Let's see how this one goes. Somebody commented on my video recently and they were really upset with me that the pound dollar was going higher. And they said that the edge finder had pointed out the pound was looking bearish a few days back. Well, it's no longer looking as bearish on the edge finder, but if you guys remember, a couple things about the edge finder. First of all, the edge finder is not a holy grail system. I really wish it was so easy as, oh, pound Aussie bearish, I'm just going to sell it with everything and make a bunch of money. That's not how the edge finder works. The edge finder is a sourcing tool. It pulls in a lot of data from a lot of places, and it allows us to get a general feel for what the economic data is pointing towards, as well as what the commitment of traders data, retail positioning. It's meant to be a tool. It's not meant to be a all-in-one, do your homework for you system. That being said, it's incredibly useful for finding great trades, but not everything the edge finder punches out is a holy grail money system, So I just wanted to point that out. If you're looking at the edge finder and you're an edge finder user, you still have to do some work. You still have to manage your own risk. You have to look for technical entries. You have to, whether you're using it to add confluence to your trades, however you're using it, it's not a holy grail. And I don't want to ever come across as saying it is, right? So pound USD was a bearish reading on the edge finder. But if you guys remember, I've mentioned that I wanted this level to break. If this level broke, it was more of a clear, okay, pound USD looks like a sell, but I never got that breakout. So pound USD, I have not touched it. I haven't traded it, and something to think about there. Euro USD, same thing, pushing higher here this morning slightly. Perhaps some of that dollar weakness helping out the euro. We'll see where that one goes.
It's our Edge Finder anniversary sale. If you want 40% off the Edge Finder, the absolute best deal of the year, don't wait and head on over to a1trading.com to chat with one of our representatives live right now. This is the biggest discount of the year, and we have so many new features to share with you, like our smart money indicator that directly compares COT data and retail data against each other, or our brand new data scanners with even more useful information and accurate scoring than ever before. Now is the perfect time to get this powerful trading tool because the 40% discount won't last forever. Celebrate the Edge Finder anniversary by grabbing yourself a copy today on our website, a1trading.com.
I actually lean bullish on things like the NASDAQ, which is kind of crazy. But again, the Edge Finder is pointing towards it. So I'll keep an eye on things like NAS 100. So if we do get a big break here, right? If you get a nice move here across the highs, possible on CPI, perhaps, the excitement around the NASDAQ continues. What I would imagine that would look like for tomorrow's CPI number, guys, is if CPI comes in nice and cool, right? If CPI is lower than expected, it might give stocks some runway. That being said, with oil prices up and with yields, trending higher here recently, I'd be surprised. I'd be honestly surprised if we saw a cooler than expected inflationary number. Not to say that we can't see one, but it would be a surprise. Not just to me, but the markets broadly, right? So oil continues to push higher. And when oil is pushing higher like this, guys, remember that this adds inflationary pressures to the picture. Rising commodity prices create energy costs going up, right? Think about every company, if we're all going to the store and we're purchasing a cereal box, right? I like to always think about a cereal box. I'll try and draw you guys a cereal box, okay? So here is your cereal box. It's sitting on the shelf. And nowadays, a cereal box, this used to be like what a cereal box looked like. You know what they did? This is what they did to cereal boxes, okay? So that was the previous one. So here's the previous one. I'm just gonna show it. This is what I like to call shrinkflation. So this is what it used to be, right? Now here's what it is now. Now what they've done is the front looks the same, but they've done this. Has anybody else noticed that at the store? Shrinkflation. You go to the store and that same cereal box, that same bag of chips has a lot less stuff in it. It's creative what they do in this inflationary environment. But again, they're just companies. They're just trying to make money, and the Fed printed $1 bajillion, so they're dealing with it too, just like you and I. Anyways, I went on a rant one time recently about how everybody hates on companies for being stingy. Well, a lot of companies offer, they operate at a very thin margin of profit. Look at Kroger's profit margin. It's not very wide. So if the cost to produce cereal boxes is going up, whether that be from commodity prices rising or just cost of labor or whatever it is, it's not the companies that are the bad guys. It's more likely central banks and government that are printing $1 bajillion and hurting this. Not just the company doesn't want to shrink your products, right? That's not in their best interest because they know people are not going to be happy with that and they might sell less. They don't love that, but they have to keep their profit margin from going smaller, right? If they're operating at a 5% profit margin, it would destroy, the whole thing if it dropped down to 2% because the price of everything went up. Anyways, the point I'm getting at is that rising oil prices put pressure on everything else, because all of those cereal box companies, all those, everything companies, they need to ship stuff, and shipping requires energy. And if energy costs go up, that eventually gets passed to the consumer. My point with that is that energy prices are rising. And so as long as that is persistent, that's going to be a troublesome thing to the inflation story. Not to mention that yields are also rising, and what that also signals, at least a lot of people would argue that this is signaling that the economy is continuing to look relatively stronger than expected. So when you combine that with rising energy prices, you might be in store for some inflationary pressures. And as I talked yesterday with Ivan, who's hanging out in the chat here today, he mentioned that there's a possibility, a small one, but a possibility that the topic of rate hikes could be reintroduced. I wouldn't be surprised that if you see a hot inflation read tomorrow, that's 3 months in a row that we've had higher than expected inflation. If that happens, suddenly the picture looks a little scarier than it did going forward. And I'm not, you know, a bear on stocks by any means, but I'll say this, I'm much more of a bull on gold right now. I've stayed bullish on gold. I'm still in my positions. Guys, these trades are still going crazy. The gold position is up $20,000 at this point. And the oil trade also up 12.4K. It's just going crazy. So, yeah. Nick, gold is way overbought. Is this a sign? Here's the thing. Your name is follow the trend, right? Your username here is follow the trend. You can't be saying gold is overbought, because again, here's the danger of saying gold is overbought. I can tell you, people, I repeat myself a lot on streams, but so does the audience. The audience has been telling me gold is overbought since over here. And if you've been saying gold is overbought, a lot of people have also dropped comments that gold has blown their account, thinking that because they thought it was overbought. Now, I'm not saying that gold is not overbought. Is it probably due for a correction at some point, a pullback? Yes, but when that correction comes, I have no idea. Right now, the fundamentals lean very bullish overall for gold. Although I'm not adding any new trades, I've got 2 positions on that I continue to hold tight to and trail stops. In fact, I let me see. Can I trail a stop again today? I probably could. Get this level here. Let me draw this in. In fact, this is probably a prudent thing to do ahead of CPI. So let me do that. I'm gonna trail stops here in just a second. Before I do that, let me just also give you guys an updated look at the Edge Finders current setups. We have oil still up there, NZD CAD, USD CAD, NAS 100, Aussie CAD, dollar yen, dollar ZAR, dollar Swiss. Like I said, I picked up dollar Swiss this morning. We'll see how that one plays out. Pound Aussie, the Nikkei, and the FTSE are your 3 bearish setups currently on the Edge Finder. When I picked up gold and oil, I'm still in oil. Gold has dropped back to neutral since then, but I'm still continuing to trail stops. But at the time that I took the trade, we were getting some really bullish readings on both oil and gold, and I continue to hold both of them in the account. So we'll see where this thing continues to go. But for me right now, the game plan for gold is continue to trail, let it run. Same thing with oil, which has been pretty impressive as well. So we'll let those go and do their thing. Dollar Swiss for me doesn't seem to be working out very well so far. I picked up a long position here this morning and could end up taking a stop on this one if the price breaks support. So if we break support here, I'll probably be taken out for a loss on dollar Swiss, and that'll be that. But I also just want to say, you know, a lot of times traders are very afraid of like a stop loss, and to capture the trades that I've got like on gold and oil, what that usually is preceded by is several attempts where I get stopped out. So I just want to say, like, when it comes to these big moves that occasionally happen, you're not just going to be able to enter them and never take stop losses, right? So to enter into these trades, I took several stop losses on gold and oil trying to catch the big one, and finally the big one came. So I just wanted to add that context. You know, I wish it was as easy as, you know, just every time you enter the trade, you had those kind of moves. It's very rare to find them in the markets, and gold's move is a very, very impressive one. So far, it's up like 14% on the year, which is a remarkable, it's actually outperforming stocks this year so far. So kind of crazy on that front. Frank, I guess in terms of stuff you're watching this week, what's on your radar?
Well, I'm still in gold. I just closed my NAS trade. I had a NASDAQ vertical, which is on the Qs.
Oh, nice.
We opened up above my range, and I just decided to take profit there. But yeah, there's just a lot of back and forth going on, and I'd be kind of sad if price just kept shooting higher, but the past several days have just been very back and forth. And yeah, so I thought once I get price back up here, I think I'm just going to close, maybe look for another entry point, but I don't want to let my time expire because I have these calls on here. So I have a bullish call vertical. So I needed to be at the spot at a certain point in time. And if it doesn't, then it's worthless. So,
which of course, going into CPI tomorrow, it could really go either direction depending on what comes out. I guess speaking of CPI, Frank, tomorrow, if CPI comes in hotter than expected, that would be, I mentioned this earlier, that would be the third consecutive month that we have higher than expected inflation prints. And I think if that happens, I think 3 months, you can't like chalk it up to, oh, it was just kind of a seasonal thing or just a fluky number. Like at 3 months, if you get 3 consecutive hot inflation reads, we might be in store for a little bit of a surprise for markets. Would you agree? I mean, if you get 3 in a row, this idea that we're going to get 3 rate cuts in the remainder of this year, to me sounds a little aggressive. What do you think?
Yeah, I think the stagflation issue is probably not as prevalent anymore, just because we saw really good jobs numbers the past couple times. The economy is not really slowing down. PMI shows expansion. But yeah, I think hotter inflation is just going to mean higher rates for longer. I don't think the Fed is going to, change their course and say we're going to start hiking again. So I think, yeah, that forecast of the June cut, we started in March, now we're in June. Who knows where we'll forecast our first cut if they don't cut in June, but the Fed has not changed their mind. They still have 75 basis points taken off the table by the end of the year, but that can change. It all just depends on the inflation data. So this is probably I would say, one of the more important indicators we see this year.
Yeah, I would agree. I mean, this is probably, in my view, arguably one of the most important inflation prints that we've had in a while, because again, the third month, I know that a lot of economists, they use like 3-month averages and stuff for stuff like this, like in their readings, in their studies, they look at a 3-month rolling average on inflation or on jobs data. And so if you get, again, that consecutive third time around, it could be something scary. I think also with oil prices doing what they're doing, Frank, it's just like, that's a wild card that the market, I think, is here we are with the S&P 500. We're barely off the all-time highs. And if you actually get some escalation in the Middle East or Ukraine or China, if that actually happens, a lot of times people would say, oh, well, a lot of times like buy stuff on war news, like buy the stock market after war news. It's actually historically not been a bad trade. However, if you actually get real escalation in the Middle East, that's like oil mecca, literally. So if you have all this oil supply that gets locked up, sanctions start happening, we could find ourselves in another 2022 when the supply of oil was dried up drastically quickly because Russia and supplying it to Europe suddenly was off the table. So I think that the possibility is there that if something escalates, inflation could come roaring back and become a real problem. And I'm not in the camp of thinking that rate hikes could come back on the table, but they could theoretically if you have an inflation spike yet again. So it's again, I think that's what the market is not thinking about. And if it happens, it would probably equate to, I would say, probably like a 10% pullback in the S&P at least. But I don't know. Could be interesting.
Right. So you're saying that those geopolitical issues in the Middle East right now could be a big threat to inflation? Because
because if that oil price goes up or it continues to move higher, like if oil continues to trend up and we get escalation and concerns about whatever's happening everywhere in the world, that equates to prices going up everywhere. And you add that on to an economy that's already doing quite well. Sure, can we survive as long as we have growth? Yes, but if that inflation problem persists, growth could start to deteriorate pretty quickly and lead to a pretty hard recession. So I think that might be something to at least watch. I'm not necessarily saying that's what's going to happen, but there are signs that are forming that Iran is escalating and the NATO thing with Ukraine and Russia unwilling to back down. And in fact, I think it's not talked about on the news very much, but I think in terms of the war effort in Ukraine, Russia is making some progress, which is especially concerning if you think about another spending side of things, Congress, right? If they're gonna get Ukraine or help Ukraine in this situation, that essentially turns into a ton of money printing, which is a highly controversial topic in terms of what Congress does. But regardless, it could equate to a lot of spending of money.
Like the U.S. printing money, you mean, to join like some sort of war effort?
Yeah, because I think that in the war effort with Ukraine, it kind of falls on the U.S. like, because we're the big money provider to that situation, and if that situation is going poorly, it just means more money spending. So, I think that might be, Frank, we might have just talked through kind of the bull case for gold here. Why it continues to be so strong is there's a real, threat to kind of global peace right now. It's unfortunate because I think I saw something, Frank, that was we got to find this indicator. There's like a global peace indicator or something. I saw it on a video, and it showed that we've entered into recently a time of the highest, I guess, violence in decades, or maybe not decades, but at least in quite some time, which is a little concerning to say the least.
Yeah, that a geopolitical indicator would be pretty big for oil and commodities for sure.
Anyways, Frank, we got Wednesday CPI, Thursday PPI. Should be interesting week. And I see you've got the chart pulled up too.
Yeah, I got your inflation data here.
Okay, don't worry about it. It came back now. I just needed to refresh the page. Anyways, this is the theme that I was talking about. So a lot of people are thinking that the ECB may actually be primed to cut rates sooner. You can see this soft green color is inflation in Europe, and it's come down pretty steadily when compared to US inflation, which has come down, up.
US is very choppy.
Yeah. And if we get a hot inflation read for tomorrow, the euro dollar is probably going lower. That would be my opinion, but we'll see.
Yeah, but I would be kind of surprised if all of these countries stayed at the rates they're at. I would expect at least one to cut. Surprise cut.
Yeah, that could be something too. We have, did I get that right? I think we do have, maybe we don't have the Swiss National Bank. I thought we did. We have the Bank of Canada. That maybe is what I'm thinking. Tomorrow we get the decision out of the Bank of Canada, which, let's see, can we add Canada into this picture really quick? So Canadian inflation has also come down pretty meaningfully. It was higher than the US for a little bit there, and now has kind of come down underneath it. So I don't know. We'll have to see, Frank. But anyways, you might have made the right call on that NASDAQ. So you ended up closing. You said you closed your position on it.
Yeah, this morning, just nice. Right before I hopped on the stream.
Now, was it in profit when you closed?
Yeah.
Oh, awesome.
It was right above my range, so I closed it as soon as I could, and just wanted to get out for now because I don't know where this market is going to move. Yeah, that's I think it's probably a wise call, just because again the inflation could go either direction, and I think it's skewed. If inflation comes in lower than expected, I think the NASDAQ jumps, but I think if inflation comes in hotter than expected, the NASDAQ really drops. So I think that the movement is skewed to the downside in terms of like risk.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button, or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.